Elliott Wave. Okay. If you are in version 10 of, I suggest you reboot tonight when you get off the screen. And practical Elliott Wave lucky. Do you feel lucky, punk? Now, Elliott Wave for me is a lifestyle choice, and it's a way of thinking for me, and it's helped me in a number of ways. And I can't describe how many people who have been listening to me probably have the first thing they go, Elliott Wave, what a crock of shit. Who's said Elliott Wave, what a crock of shit? Who's this lunatic that talks about Elliott Wave? Few people, few hands going up. Yeah, Martin. Okay, few people. So what about those people who thought charts, what a crock of shit? What about those people who heard me say $20 for BHP or $19.81 for BHP? Did you say what a crock? Anyone? Just, it's okay. I can deal with it. I'm a big boy. As I get older, you sort of get less worried about dying. So I didn't mind facing off on this criminal dude. It's a funny approach. Didn't mind headbutting the dickhead. Banks are a crock of shit. Okay, that's good. Okay, so we're going to try and look at how to pick some turning points. And this is the financial services stuff, which we should all remember by heart. Basically, this is under AFSL 338674 of Aruda Proprietary Limited, 299753 ASIC representative number. This is not personal advice. It is deemed to be general advice because I don't know your personal circumstances, objectives or situations or needs. And Mike's saying, I heard your call on BHP but did not understand how you arrived at that. We might be able to go into that a little bit later. Now, we all know BHP didn't bottom at $19.81. So I was out. It bottomed on Friday by $19.81, but it broke down by 5 cents to $19.76 and 76 cents, $19.76 to be precise. So most of you have worked out how to raise your hands. If you haven't worked out, press that little button there on the side, and to put questions in when I call for them, please. That would be great. So what's this in for you? What's in it for you? Basically, I want you to understand a little bit when you should be taking profit, when you should be holding on, when you should be just chucking them out, how to judge the market strength, and when to pass up on the trade and discover what's most useful in trading and investing. Because I've been giving a call to buy BHP as an investor. Who here in the Profit Hunter group, who here has been buying as an investor in BHP? And Adrian, you can actually pipe up if you want to. You can actually turn yourself on and off, as long as you're not playing Pat Benatar at full bore or shine on your crazy diamond. So, questions. Are you an investor? I need to know, are you a trader? Now, I have some polls here, but I just want you to put up that that poll. Yep, got some at $19.82. Tony, that's fantastic. Tony S is both an investor and a trader. That's great. Who feels like they're a deer in a frozen headlight? Mark, learning to trade, fantastic. I believe we have some thanks to you, Mark, as well. Julie was talking about that may have been you, and she was thank you greatly for that. Is it too late for a BHP for a trade, is Caroline's question. Quentin is saying, trader would like to be an investor. Fantastic. You can do both. It's just a different set of buckets. Now, I'd like you to say yes if you've never done a David Hunt webinar and never experienced technical issues before in a webinar. Have you done a David Hunt? It's guaranteed to be some sort of technical, if it's an evening one, because I've pounded the computer, and a few people have said they've raised your hands. A few people say they've not done anything before. Okay, so, and who's attended a webcast with me? I'd like to know that. Your brother should be here tonight. Okay, never before. Quentin, welcome aboard. And fantastic. Okay, I want to know, did you buy shares last Monday? Raise your hands if you bought shares last Monday. And this, now you should be able to see, there's 50% say yes, 63% say no, 60% say no. Have we bought recently? Yes. Well, we can talk about that soon. Once years ago before. Oh, Gary, how are you? 60% say no. 2% say yes, I took profit quickly. 0% say no, actually I went short, so nobody went short. That's fantastic. 4% said yes, I took profit quickly. Okay, so about 43% have voted. If we could get a couple more people voting in there, there's a little box there you can tick on whatever was appropriate for you. About 60%. It's curious because we're around 60%, 36%, 6% took profit quickly. Okay. Caroline's. Okay, so now I want you to ask questions. We've got about, the results are in, let's call them in, about 56% said no, 38% said yes, 7% said yes, but I took profit quickly. And it's curious, those numbers sort of shape out to some Fibonacci ratios, which we're going to talk about later. So here's another poll. And I'm going to say here, ask you, how do you feel now? For those 50% say I'm bored, I'm unhappy. We'll wait for a little while. Just give me your honest opinion. And these are of the people who answered previously. That would be great. 3% say they're sold and stopped out. Trying to get back in, I missed out. I bought and I'm happy. 38%. Okay, when we get up to 50%, we'll come in and I'll give you the results of the poll. So, how does it feel? Bought earlier and holding. How did you feel when you bought earlier and held, Martin? Great. We're nearly about 50%. If everyone can vote in, last chance to have a vote. Okay, so here's the poll finished. Okay. Martin says he was frightened because he bought earlier. Okay, so what you're seeing here is the results. I've just worked out how to use it. Martin's saying, I was frightened. I bought earlier and I was holding. Now, what that meant is we have 34% say I bought and I'm happy. This is of the people that went into the market. 32% said I missed out. 34% I'm trying to get back in. So they're feeling that like they've missed out also. So about 68% of people feel like they've missed out. 4% said they sold and were stopped out. And I guess they would be feeling like they missed out also. And 34% said, I bought and I'm happy. And so we have about, looks like about, what's that, about, let's say 70% of people roughly feel like they're missed out. Now there's some people have duplicated, and Martin was saying he was frightened. So would it surprise you to know that basically last week was the time that we were looking for a low in the market? Would that surprise you? We were looking for a low between the 13th of November and the 16th of November for a low. The Dow was at a price level that our PHG members were looking for. I'd identified the 17,000 to 17,200 in advance. So instead of being frightened or feeling like you've missed out, would it have been helpful to know that you could be looking for a low at that time and around that price? BHP was in the zone for investors. Would that have been helpful? Now, the Australian Share Price Index futures came into play, and it hit 9 ticks off my target level. So tonight, we're going to look at a couple of things. We're going to look at the banks. Okay. We're looking for a surprise guest share and another surprise share. And I think that Christmas gig is pretty good. So let's have a look at what should be coming up differently. There's always something there, isn't there? Okay. Okay, so let's look at the pattern of one of the bank stocks. And this is the top here, which I would hazard a guess would be wave 5. Let's talk about that in a little while. There's a few things missing from my life that I thought would be good ones that didn't get saved last time. Can I put on full screen, please? Maria, I do have full screen on, I thought, but maybe. Okay, here we go. So we're looking at the monthly chart of a bank stock. It's called ANZ, which you weren't supposed to see, but because of the shift in things that you are seeing what it is now. Okay, so fortunately you can see a few things that things won't be perfect, unfortunately. I like everything to be perfect, but it doesn't work that way. Perfection in the market's no good. Let's just change everything because I had it all perfectly set up for you. It's like cooking a dinner, isn't it, really? Once you save a file, it sort of destroys itself in some places. Okay, let's move these slightly to the left. Frustrating. Okay, I think we can go now. We see here a stock, which you can now realize is ANZ, but you weren't supposed to realize that. We have a movement down here, which we call A, to this little point here. And then we have a movement up to little B wave. Notice the volume is increasing as it's falling, as it goes into C wave, wave C of bigger wave 2. We then see it move up in a wave 1, 2, 3, with a 1, 2, 3, 4, little 5, for a terminating third wave, a dip down for a fourth, and this is out of order, but that's okay. We can see wave 5 completed up there. Now this tells us a lot of things about banks. Does anyone remember what I said about the banks about 6 months ago? Does anyone remember what I said in my forecasts? Will go lower, says Francois. For those of you who attend my forecasts, you would have known well in advance. Unfortunately, I'm really not going to be on Your Money or Call much anymore. That's probably a dying program. I can see people aren't interested in it, and certainly the actual management seem to be no longer interested in not putting any resources in there. So I warned people at the top of wave 5 back in April that the banks would go lower. Now this is ANZ, and I'll explain a question about ABC for Mike. And let me do this, and I'm glad I don't have all of these things run up because the little logic won't work. A is where the market pulls back a little bit here. B is where it rallies up and fails to get above that old high after it's had basically a 3, 4, and possibly a 5 here. There might be a failed 5th in this. It's hard to judge, but what I can see clearly is that we see an ABC to the downside here. Now, once it starts up again with one swing, we can start to say in the direction of the prior trend, if it's going up, we have a 1, 2, and then there's 1, 2 little subdivisions. So this is a little subset. 1, 2, 3, 4, 5 are a subset of wave 3. Now, wave A, this wave A, B, C, from there, is a subset of wave 2. Wave 2 is a corrective target. And I'll give you the technical picture a little bit later on. But what we can see here is that wave 5 terminates. So once you're counting to 5, 1, 2, 3, 4, 5, and we never know perfectly whether it's finished. We're trying to judge it from the market psychology. We're trying to judge it from what the brokers are saying. Mostly at the brokers here, everyone will be saying it's going up. And mostly down here at the bottom, particularly on wave 2, everyone will be saying it's going down. Now, what I can see here is that after a wave 5 structure, we should see an ABC pattern. So we've seen an A, B, C. Now, what happens here is I've put a question mark there. If we start to see this market churn sideways, which we actually are, and form a bit of a triangle, we probably have another move to the downside, which we might be labeled and change this ranking not to be C, but to be 1. Okay, and we'll talk about this a little bit later on. And what I then do is I then move down to the weekly chart and get rid of all the horrible patterns. Would anyone like purple color? Would purple color be better than the horrid color that I've chosen here? Give me a hand. Yep, purple would be better. Hey, Rod, I haven't seen you on for a while. Hope you're well. On the weekly chart, this is the same chart. It's just that we're looking at from the top here, where we see here, we started over here on that chart. Is that okay? So Elliott wave, write this down. Elliott wave is fractal in nature. In other words, when you're looking at waves on a higher time frame, you can open it up and look at the waves on the next lower time frame inside it, and then lower than that, you look inside it, and then lower than that, it looks inside it. And it should have some sort of logical consistency within those waves. Is everyone happy with what I'm saying there? Okay, Tony, sorry, Mike, I'll get there. And what we see here, hey, Rowan, I've been wondering where you are. You've been getting up too early being in Queensland these days. So what we see here now, and I do have the, I think I have the chart here, and it's, of course, it's been buggered up by the shift. Just let me move it and shake it across so that it looks close to what I was desiring for you to see. Because otherwise it just will not make sense and I'll have to draw lots of things and it would be a bit annoying. Might look better. So this is on the weekly chart, and we can see here, we could call this entire move down wave one. This here, a wave one move. And notice here we have something that looks like also a little wave one, a little wave two, a little wave three, and I'm just doing this for the benefit of everybody, and a little wave four. I think that's the way you do four. No, actually that's, yeah, a little wave four. I can never remember what I do wave four. I think that's wave four. And then we have a little wave five on the downside. Yeah, you will. Thanks, Louise. Hope he's had a good stint up in the hot weather. So what we can see here is we've got a little wave one down. Then we have a little wave two up, which is a pullback. Now this is unusual. Wave twos are normally not that shallow, but it indicated weakness on the behalf of ANZ. So I was, let's say, bearish for PHG members. And what we see here is a wave two, little wave two up, that little rally there. And forgive me, my little mouse won't let me move down here. So we see the wave up to wave two. It stops up here, then it has a little move down to wave one there, a wave two up, and then it has a better decline for little wave three, little wave four, little wave five. Can you see how this same pattern that was on the first leg repeated in a larger leg down? Please raise your hands if you can see that. If it's confusing you, just put it in a box and ask a question. Great. Now, what this means is that down the bottom here, after 5 waves have moved down, you can start to think, aha, maybe the goose on the television, and I might be that goose sometimes, don't get me wrong, sometimes I'll get it wrong at the bottom because it will look like it's going lower. The goose on the television telling you, I wouldn't be putting that in my portfolio, would be wrong. Peter's saying, now I see it after 5 years of looking. That's fantastic. Now, what we see here is a wave 4, and I would say this is a wave 4. And down here, I was starting to say, I should be doing an Elliott wave webinar so people can see this. And that was basically at the middle of last week, which was around about the $26, because I could see that it was coming to the end of some sort of move. Now, would that be helpful for you to see? Let me know if that would be helpful to know. Shit, I've got 4 years to go before Robert. Well, I don't know. You might not. You might not. Okay, so here we're saying this could be wave 5. Now, there's a couple of problems with wave 5, which we'll talk about later. Okay, so we will talk about that a little bit later. That's correct. Now, let's get rid of some of this stuff on the screen. And I'll look down at the dailies, but it will get a bit long in the tooth. What we can see here is, I'll cut to the chase. We can see a little pattern here which failed up here quite nicely, and by the time it gets below about $29, $28, you can start saying at this point ANZ was kaput when it broke down below here at this point and heading lower. That was fair enough. What we see now is potentially an A, B, C pattern with some good volume on the upside on the last leg up. Possibly a ABC pattern. And as Martin is saying, wave 1 and wave 5 are not equal yet, and we will look at that a little bit later. So we watch these areas. Now, what is the important thing for the banks? What purpose do the banks serve us, aside from stealing off us legally? Interest rates, yeah. The major thing that the banks do for us, they loan money, dividends, they give us dividends. The banks seem to provide most of the profitability and the money in the markets because effectively they are able to steal off us any time. The banks can turn around and say, oh, I've just changed my terms and conditions, and give you and get money off you whenever they feel like it. They can also withhold dividends. They can raise interest rates when they feel like it. And largely the Reserve Bank and APRA don't really care what they do. So what happens is that we're getting a bit of a rally in ANZ at the moment, which is supported by volume. Now, this friend is a famous CBA. And what I'm saying about the banks is the banks actually give us most of the index move. So if the banks are going down, the stock market is not likely to be going up. Now, I haven't done in my specialized drawing trick with CBA just yet, and I'm going to probably go a little bit accelerate, but we might say this was a low in 2009. We might say this is wave 1, and you can quite clearly see here, there's a little, this is on the monthly chart, so you've got to take it with degree. A little wave 1, a little wave 3, some sort of 4-ish. How do we do that? I always get this wrong. Let's call that a 4 and call this a 5 to complete this wave 1. Then we get an A, B, C, A, B, C. And you get used to this, and it's easier to draw it back here than it is up here. I can tell you that now. There's no doubt about that. But we can see here, we might say this is wave 1, this is a wave 2, something like that. 3, a bit of a running correction for 4. We might have, yeah, actually we've probably got a little wave 1, 2, then we've got a 3, then we've got a 4 here, then we've got a 5, and then we get an A here, a B here, possibly, and a C. So that's a question mark. And it's only confirmed this is a C wave when it closes back through here and it goes to new highs. Is that all right? Has everyone got the concept there? Now, I must warn you, there are a lot of good-looking Australian stocks at the moment. And I was very happy to be telling people on Monday to be buying shares. And if C goes lower, what is it? That becomes morphs into a wave 5, which would be very irritating for people, would it not? That might be very irritating. But what we can see here, if it goes up to here, and there is a point at which CBA becomes a likely candidate for a wave 4 and then another decline. How does everyone feel about that? Would you like to know where that might be? We might have a look at what point it might be at the end, right? Okay, there is a stock which we might talk about here, but this is what I posted on Monday. This was posted on the 17th of November, and you can see here what I've said here is, seeing as that was probably the low for a while yesterday, increase super allocations by 1% or even 3%. And that was done, for those people who are PHG members, that was done at 10:15 in the morning. It was posted 10:15. Can any one of the PHG members see when you're looking for this on the posts that you can see 10:15? Now we had been buying a bit there. Tony, that is something that happens at the webinars. If you want to upgrade to being a gold member, send me an email and I can fix you up with something useful there. This is the SPY. This is in response to a question here. SPY futures on the 17th at 12:57. Why should long here? I'd been saying we can buy with a close stop the day before. Why need for a close stop? Wasn't that yesterday's story? 50.14 is the stop on the SPY. So we've turned into bulls on the equities over the last couple of days, particularly after the 16th. We were pretty keen to get in there. Where's our come on, equities? So the SPY had changed its spots a couple of days ago on my data. But basically, we're getting excited down here on the 17th, down on this low here, and getting in for the buy. So wasn't that better than waiting around, hoping that it was going to keep on going? Hoping that it would just stop. We bought when it got a little bit of a charge up. Now, what we can see is there's a lot of overlap in this market, and we can see ABCs to here. We can't see how impulsive this is because we can't see the volume. We just need to add in some volume. We can see volume is okay, but it's not scintillating at the moment. So let's charge on with a couple more things. Might just have a look at the PHG trade on investors time frame. Just 1 second. We'll see if we can find that for the archives. PHG trades on the 18th. Let's talk about the 18th. Now, BHP, we talked about here, that what I did was I told the investors to buy dips to $21.20 for 1/3 of the position. And I set it on one proviso, that they had gotten out of the stocks higher up and get in 1/3. I said it probably goes down to $20 or $19.80. So we then looked for 1/3 at $21. We looked for another dip to buy at $20.07, another dip to buy at $19.96, and another dip to buy at $19.80 with a stop loss at $13. Now, what I did was I explained to people, and we'll talk about BHP's chart later. I said, for traders, what we will do is we'll buy in at $1 and 1/3 at 1996, maybe $19.87, or at 1981. So we can get across there. I originally put a stop loss down lower at $19.50, I believe. And on this day, the 18th, I said, we're probably going to be stopped out if we raise our stop, but I want to get stopped out in case it rolls over. And I call this the son of revenge trade. So that's the PHG trade. Today, on BHP, I actually flipped the switch and said, okay, well, the investors are still in. We've seen the market shake out down to a new low by 5 cents. We're not in the trade. But then I said, BHP is a BHP, back on your horses pronto, bloody hot prospect, new PHG trade, buy dips to $20.24 or dips to buy trade at $20.24 24 cents or dips to $20.10. Stop at $19.75. Most people are telling you to sell BHP, and we might talk about later why that bottomed. And thanks, Julie, for the trigger today about who to look for when they're getting it wrong. All we have is a stop loss at $19.75. So we went for BHP. No, we went for BHP. Okay, let's shift around back to the rest of the presentation. I apologize for the diversion. On the CBA, we can see also this pattern which I've drawn in of an ABC. Now, we'll talk about the target later. We can also see here that we have a 5-wave structure to the downside. We have a wave 2 here on the weekly charts. We have a wave 3 possibly on the downside, and then we have a bounce. I can tell you categorically the level at which CBA becomes a buy, and I'll do that a little bit later. So we can see volume coming up, which is okay. Been saying don't go short the banks. In fact, I think the index is going up. So on the monthly charts, this is National Australia Bank. We see something different on National Australia Bank. National Australia Bank is showing 1, 2, 3, 4, little 4. It's not showing the same strength. I said that there were 2 banks that are different, 2 banks that are the same. Let's look on the weekly charts. We can see here, this also gives us a point at which we're excited. And we see 1, 2. Is that a 3? No, it's not a 3 because it doesn't fit some of the rules. So NAB is interesting. On the daily charts, we can see NAB getting a bit of volume on the top side. We might talk about NAB a bit later. Westpac, we see also 1, 2. Is this 3 or is it an ABC? We can prove that above $32. On the weekly chart, we also see some rally here, but confusion. It's a confusing pattern. On the daily chart, we can see volume has not been great for Westpac. So which banks provide a decent conclusion? The answer is possibly ANZ is terminating. ANZ and CBA, they're a lot more clearer. Exactly, Francois. So I can say that's good. Let's have a look at some of the other banks. Oh, okay. This is just if you want to attend live webinars or watch recent videos online, send me an email. Okay, this is for, this is something we produced a little while back. Now, Tony, patience. 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 Grasshopper. Now, I've been getting some nice emails, and we'll talk about those a bit later on. We will get there. I don't know how to do this properly, but here's an email. I have 2 people who call themselves Grobbos. They actually have similar body structure and hair, by the way. Anyway, this is Gary Robertson from Yowie Bay. Your BHP long-term target has arrived. That should upset some of the experts. Well done. Nice call sometime back when you said it hit be at $20. A lot of people laughed. If so, where from there is used to the washout. This is what I'm trying to tell you. Adrian was watching when we went long on BHP 4 years back. Thank you. Congratulate you. Targets being hit. Prepare to disclose predictions to the world. You realise now that if you say BHP is going further down, it'll be mass exodus. Well, I'm not trying to say that at the moment. Okay, let's get out of there. That's so let's get ready with that. Let's go. You don't need this. You don't need that. You don't need this. You don't need that. You don't need that. That's what I've done. So let's get going here. Let's get to the theory. Now, I have the Bendigo charts here, but I want to explain a bit of the theory with a stylized approach. Now, this gentleman learnt from the Arabs, and he learnt that rabbits multiplied in the rate of, if you got 1 and 1 rabbit, you got 2 the next one, you got 3 the next one, you got 5 the next one, you got 8 the next round. There was a rough calculation to work out how many rabbits you'd get from the Arabs. And these numbers ran up going 1, 1, 2, 3, 5, 8, 5, 13, 21, 34, 55. And the next one, if you add 34 and 55 together, you get 89. And what those numbers do is tend to the 61.8% ratio between each other. So 34 over 55 equals 31.8. 55 over 89 tends towards 61.8. If you divide 34 into 55, you come up with 1.618, so which is the reciprocal of 1.618. This man came up with it, R.N. Elliott, and he got the ideas from waves, which I like to play with. These basic tenets of Elliott wave, I've shown you already that each and every wave is part of a larger wave set. So if you're not sure what's going on in the wave count, look up and down across the time frame. If you're not sure what's happening on the weekly chart or the hourly chart, look at the daily. If you're not sure what's going on the weekly charts, look at the daily and monthly, and that will give you some clarity. Hard and fast moves are impulsive moves or trends, and that's where you make the money. We're trying to get in when the market is giving us a wave 1 and 3. So where does a wave start? It starts when the nature of buying and selling changes. One set gets stronger and one set gets weaker. Over the past week or so, we've seen a change from sellers to buyers. Would you agree with that? We've seen, for those people who are short and missing out, could you tell me your feelings about how you feel by not having bought on Monday or Friday or Tuesday when the optimal time was? Let me know how you feel. That would be good. Does it feel a little bit of pain there that you are not in? So let's go through the classical disappointed, says Mark. Okay. So the classical Elliott wave pattern looks like this. Wave 1 is a move up. It just is a move up. Nothing better. It's just say this is the genesis of a price move. So disappointed, unsure, given how volatile the market is. Now, one thing that I do know is the market's not volatile. It just is. If it wasn't volatile, we wouldn't do it. Because volatility is the basis of profit and opportunity as well as risk. Volatility is not a dirty word. I've just written a book which you can get from ades.com.au. Costs you $7. If you want to go and get that, that's cool. Just go to the front page and get a hold of that. Is it Elliott wave that gives us trend change dates? Ask Steve. Answer is sometimes. I have an Elliott wave friend who does that. What happens is I use other things for the trend change dates. So, and that's a whole subject of a weekend seminar. Wave 1 starts up, then it finishes. Then we get a pullback. This is the classical Elliott wave pattern. And we get a pullback. So this we could call A. This rally up we could call B. And in theory, the next leg down is called C. Now what happens is that this C wave, in theory, in our perfect world, would be 61.8% retracement. And that would be called a wave 2. And we've gone through what I've said before. When we are looking for wave 2 to be complete, or at least show us that the market may go up, we look for it to break back up through the low of wave A and the start of wave B, and then we can call this down here, wave C. So we're waiting for it to go through this point here where this green arrow is. We can start to buy around here, around the 61.8% retracement. We can give it a go. And that's on average where we're targeting for. Now, why we're targeting for that rally is we're looking for the big move, which is the big kahuna, which is wave 3. Wave 3 is where you can do no wrong. You buy in the morning, and by the end of the day, you're in profit. Wave 3 is exciting. It's fun. But you need to get on before it starts really to move, because once you start to get into move, you get disappointment like people are feeling now. For those who are feeling disappointment, you'll be feeling that this move has been strong, which it has been. And as you saw that on Tuesday, the 17th, I'm saying to people, don't worry about having it at close stop loss anymore, because this is a strong market. And so you can judge when you're about to be in a wave 4. I think we saw some classic ABC patterns in the whole market, which we might get to later. But so we see wave 1 is the top, is where most economists, most fund managers will be buying. Wave 3 is the most exciting point. We can buy through the top of wave B, we can buy through the bottom of wave A, we can buy at the bottom of wave C. 40% of the time, the bottom at wave C will make you money as long as you put your stop loss wide enough away that you don't get knocked off. By the top of wave A, you're probably looking at about a 50-50 chance of making money. But the 50-50 chance of making money is to make money on wave 3, which is that beautiful and big move up. By the top of wave B, we're looking at about a 55% chance of making money. And by the top of wave A, we're looking at probably about now about a 45% chance of making money, because it might fail, it might fall back down, we get stopped out, but you're looking for a smaller slice of that big move up. Who's heard of Bernard Baruch? Bernard Baruch was a very famous investor and trader. He was looking to take out the middle third of the trade. So if you're like Bernard Baruch, you're looking at that one. If you're an Elliott wave person, you're trying for this, you could be happy with this breakthrough wave A. You'd be happy with this, but you probably don't feel good about buying this top area because you're at risk in the market. So once you're through this area, you've got to really, at top of wave 1, you've got to really start working on it. Probably telling you too much. At the top of wave 3, everybody's a trend follower. Everybody's making money. Everybody is partying like it's 1999. And you're getting the stories about how much people are making in the market. We have just seen that about 6 months ago, I believe, in the property markets. Possibly now in Melbourne, we're seeing that. And then all of a sudden, somebody takes some profit, some buyers get some reluctance, some sales fall through. I saw some mortgagee sales going through in Bondi, I think it was Bondi, with beautiful views, mortgagee sale going through. You wouldn't have thought that would have happened in a boom market. So top of wave 3, we're starting to get overstretched. People are starting to be over leveraged. There's huge amounts of margin going in. And then it has a pullback. And it pulls back about 38.2% retracement. Now we saw a lot of 38%. We saw some 60%. These were Fibonacci numbers that came up in the statistics that we saw with the answers you were giving as a group. These are patterns that appear quite often. So we see wave A pulls back, should be 38.2%. Wave B has a ratio. I won't go into those ratios. It will just bore you. Wave C, by this time you're thinking, definitely this is a wave 4. And wave 4 is often a contracting triangle. And what we see here is you can generally draw it up, and wave 4 tends to have five patterns in those little triangles. So it's now a little bit later than 9 o'clock. I will go further. We haven't got Terry here to police me. And what we see here is that it breaks out. Once it's finished an E wave, then you're looking for the next move up, which is wave 5, surprisingly. The great thing about wave 5 is often that its length will equal wave 1. So wave 5 equals wave 4 projected up from the bottom of wave 4. So wave 5 has a target, and it usually is towards that old top at wave 3. At the top of wave 5, even the PVD indicator is bullish. And so what we see is a complete 5-wave structure. Have you seen that anywhere in the charts that I've seen you before, shown you tonight? Has anyone seen any 5-wave structures if you flip them up and down? Okay, great. Rowan's saying yes. Okay, David's saying yes. Peter, tell me if I've confused you, if you don't remember that. Happy to take some flack, that's fine. So what we see here is these particular patterns unfolding quite nicely. Now, let's go back a bit. New very soft eyes. That's good, Martin. Wave 1 and 2 we see here. I can't get this to come in properly, but we see confusion. We see confusion in wave 4. We see, I don't know why these are coming up with graphic stock patterns. It should be better than that. I own it, I think. So we see here, wave 2 is often very, very bearish. And we've seen a bit of bearishness on last low, but we might talk about the overall index shortly. But we see a party at the top of wave 3, and we see confusion in wave 4. So this is where it's most bearish. There's most angst at the bottom of wave 2. And that is when I talk to, if you all look on my website, hopefully everybody's looked at the videos on my website, ades.com.au, where Julia Lee walked in to the green room and said, this is the worst thing ever. I'd already been talking with Switzer. He says, this is the worst thing ever. And October 4th, I'm saying, get ready to buy this stock market. And they thought I was completely nuts. And that was because it was a retest. It was just a pullback. And they were saying it was the worst thing ever. I was just getting more and more happier as they were talking to me. And it was like, they really hated me after that. So we've done a classical 5-wave structure to the downside. PHG, I give buy-sell signals, ASX, Forex, and commodities. Most of my profit owner members are ASX investors and traders. I give profit targets, profit takes, stop losses, and trade management and coaching thrown in. 3 times a week, I do morning speed webinars. This is where I turn around and I said on last Friday, buy BHP. And I don't muck around. Adrian was talking about listening to Crazy Diamond on Pink Floyd. I don't know if you mentioned it while it was happening. That's first thing in the morning. So if you're an active trader, you're an active advisor. I have a lot of advisors. They call me the advisor to the advisor. And so people, the brokers are sitting there, or the financial planners are sitting there, and they're going out to their customers during my webinars saying, David said buy this, buy that. I guess sometimes they don't say David did that. They say I recommend to do that. So they are recorded so that you and silver members can watch later. Gold members sit in on the webinars and ask me questions directly. Webinar transcripts are available for speed webinars, so you can read them quickly and answer questions on any ASX share. This is particularly useful for people with low bandwidth, i.e. in the country, where they can read what I said very quickly. We have PHG members who travel a lot. They might be in Nepal with the dodgiest internet you've ever seen, but they can still read the transcript. The market packages are the ASX package per annum, which is a gold package, is $3,997. The commodity package is $1,997 because they cover commodities, foreign exchange, world indices, and US stock package. Total value of $9,988. You can choose any one, a combination of all as gold and silver packages. Gold members can ask me questions, and it is by application only. And I keep it as application only because gold members need to be people who are in line with what I've done. They've done some webinars. I've got a lot of people who can ask me a lot of questions at once. If I've got too many members, I can't answer them all physically. In terms of if I've got 1,000 gold members, I would be dying answering all the questions. So I limited to about 200 people at most, and we have a full gold package with 50% saving off this price. This would be a full gold package, 50% saving. So if you're trading ASX, commodities, Forex, world indices, and US stocks and other stocks, you save 50%. If you're interested in gold, that's $3,997. Full silver package is $3,997. Now, this is not for everyone. This is for people who are extremely serious about their money and they want to get close. If you want to be a silver member, you get everything that gold members get as a recording and answers to the membership site questions that gold members ask me at any time. Gold membership is limited to only 3 people tonight, and you need to send me an email to apply. You can apply via email tonight at, and I'm giving you a 10% discount if you are here tonight, and I just need to find this thing so I can make it look pretty for you. And should be here. So just email me tonight via ades.com.au, david@ades.com.au, and ask for the coupon and application, depending on what you want. So silver members, you can join straight away. And here we go. So you can apply via email, david@ades.com.au. You can ask for the coupon. I will give you a 10% discount on either silver or gold membership. Gold membership is subject to we having the interview. We talk, we see whether you're a fit with me and I'm a fit and I can help you. So if we're not a fit, no problem. No, it doesn't cost you anything. And we can have an interview over the phone probably next Monday, but you need to send me an email tonight. So applications limited, and 3, and at david@ades.com.au. Then if your application makes sense, then we can arrange a telephone interview. Okay, so let's do on more tenets of Elliott wave. All waves of similar degree will relate in both time and price amplitude, high level. And we will talk about the CBA shortly. Impulses, moves, follow corrections, ebb and flow. You make the most money from the impulsive moves. So we're trying to find out where those impulsive moves are. Now, the full market cycle, as I said, you've got to count to 5 as an Elliott wave. If it's strong, it's 5. And you label them 1, 2, 3, 4, 5 numerically. And it's then followed by corrective waves, which are labeled ABC in a 3-wave correction, or 5 waves, which is A, B, C, D, E. And they appear, 3 waves appear in wave 2, because wave 2 and wave 4 are corrections to the impulsive waves of 1, 3, and 5. Here's some guiding rules. Wave 1 and 5 tend to be equal in length. And here's where an example where that was the case. And wave 2 will only retrace part of wave 1, i.e. not all. Wave 3 should not be the shortest waves, wave 1 and 5. We'd be breaking rules if that happens. Am I running a little bit fast for you? Just raise your hand or slow me down if it is. So we talked about wave 1s, and wave 5s can sometimes extend a bit more than expected. So corrections are the really important key. The corrections, we've seen some of these corrections appear in, for example, CBA. And we'll go on to CBA. Would it be all right if I talked about CBA in this section? We'll put it into practical sense. Okay, so what we can see here is this CBA, this ABC, talking about CBA, is a zigzag pattern. Now this happens, this is the most common, so I'll be looking for that most of the time. Now, we also have a flat pattern where A drops down and then there's not as big a drop on the C, so it's smaller than that. There's a bigger move down on the zigzag. So this has got bigger impact. By the time it breaks back through A, then it's going up. By the time it breaks back through A on the zigzag, then it's going up. We've seen that example also. Now on the triangle, this happens, this gives us a good thing. This happens in fourth waves. And the triangle means that if it's been coming down A, B, C, D, E, so if it's been coming up A, B, C, D, E, it will probably move up in the direction of the prior move. So if it's been going up before, it will move up. Now, let's go have a look at CBA. Is that okay with you? Okay, so let's clean the screen. Wave 1 and 5s and 3s inside ABC patterns are simply impulsive waves inside on a lower time frame. Let's look at CBA. Now let's look at the pattern here. I've been calling for CBA to get to $80.10. Is everyone happy with that call? I've been saying $80.10 for quite some time. When we look at our PHG, if I can find this, when we look for our PHG, maybe I've knocked it off. Anyway, inside our PHG membership site, I've been in our transcripts, I've been talking about $80.30 for $80.10 for CBA. Now what we can see is CBA has been rallying pretty nicely. It broke down here. We could say this could be an ABC pattern, could we not? ABC. Maybe. But guess what? It's knocking on the door of $80.10. What's good about $80.10? We can see that it's been rallying on decreasing volume so far. We're almost finished the month. We've got a few days to go. Volume is okay. Couple of months rally. It's okay for this month. Last month wasn't so exciting. Would you agree? Now, what we see here is this retracement between there and there is what we call a 38.2% to $80.10. If CBA cannot get above $80.10, it will head down to $68 and $61.65. We are seeing a rally in possibly what is a bear market, but the retracement is to here, and this is the hinge point. There's a lot of reasons to be ready to take profit on CBA up here. And if it goes through $80.10, buy the shit out of it on a closing price basis. $80.20 is probably a little bit better on the weeklies. Can you see what I'm getting at now? Raise your hands if you can. CBA, interesting there. Now I'm going to flip back and look at a couple of other things. We're going to have a look at Bendigo Bank, which I had up here, which is so annoying. I had a beautiful chart of it, and I think this is National Australia Bank. We can see National Australia Bank can't get, if it can get through $30, that's good. We're starting to see some signs of being a little bit more in congestion in National Australia Bank on the dailies. This is Westpac. We can see that above $32 is important, and it's been rallying on decreasing volume. On the weeklies, we can see it a little bit all over the place. On the dailies, we can see, nah, it's not so exciting. Now, I didn't get Bendigo up here because it's actually there. We're going to talk about Telstra. Would you like to talk about Telstra later? That has been one of my investors' calls to buy Telstra at $5.10 and $5.14. Did anyone buy Telstra? Has anybody bought Telstra recently at that $5.10 area? Let me know. Lots of people. Few people said no. Okay. Some people who were listening to me about $5.10. Yep, $5.14. Okay, so let's look at Telstra quickly because I wanted to chuck that in as a bit of a surprise. Now, let's look on the monthly charts. Why did I want to buy there? Well, this is fairly clear because it was a retracement of a fourth wave degree on the higher time frame. It said there's some things that I'm not telling you about this chart we haven't got time to go into, but certainly Telstra at $5.10 was an investor's style. Here we go. I know where I'm looking at now. PHG trades. So where's our PHG trades? We'll have a look here. Boom. So here's TLS. We bought in at 1/3 at $5.14, 1/3 at $5.10. We bought it on the 16th of November. Stop loss is now at $5.10 or a close below $5.12. We're looking for $5.50. That's this was when it was published on the 18th, which was at 12:32 in the morning. I actually finished it around about 11, and then the girls edited a bit, so that's why it's published as a little bit later. Been looking for $5.50. Today the high was $5.45. I guess that's, how much is that in a couple of days? So we got any numbers on that? What's that? What do we got that on a couple of days on a boring old stock like Telstra? We're down here. How much? What do we? Yeah, 6.6% there. Thanks, Adrian, with the financial controller in the background. 6.68% so far. So we've seen that jump up. So that's not a bad thing. Thanks, Jonathan. Jonathan's speedy too. Okay, another PHG member. So we've been looking for, I'll give you one that we've been looking for. That's S32. Looking for a buy down there. We're actually long SGH. These are some of the things on our portfolio. We bought that at on the 16th at $2.75 break. Now this has been rejected a little bit, but we bought it down here at $2.75, and so that's been okay for a dodgy stock. LNG, we bought a bit there. We haven't seen what that is. We had a dagger catch in CAJ. Okay, TLS was an investor's investment, Maria. That's why I put it out there. That was for investors. I categorize things into trades and investors. Who's an investor here? If you are an investor, I have a thing called the Australian Shares Report, which allows you to look carefully at things and looks at the longer term and gives you the cycles. And that's it, Australian Shares Report. That comes out every Monday, Wednesday, and Friday. You can get that from this website here. It's for investors, and I'll put that up in the chat for you if you want that. Okay, and that's edited and made to look pretty. You can also get the 6 secrets to stock market crash. The other thing is a couple. If you just John, you're asking about the book on how to profit from volatility. It's at adest.com.au, and it's going very, very slowly for some reason. So, top 5 habits of successful share investors. Don't miss out. You go along here, and you can put your thing in. It'll cost you $7, and that's just new. And obviously, it's not as pretty as it. You just go in and click on Add to Basket, and then go off and pay for it. Okay. Next thing we want to go to. We want to go back to these patterns. So we've seen that pattern, which may or may not be a zigzag pattern when you blow up in CBA. So let's blow CBA up a little bit. And we'll go to the weekly chart. And you can see here, it's not really a zigzag pattern. It's more like an ABC pattern. And CBA likes to bottom around this week. So it might not have much, it might have a good chance of getting through $80.10. So we've talked about all of these things. We haven't got time to talk about those. If you are busy and time poor, then I suggest and want to just focus on the bigger picture. Think about bronze membership, which is about forecasting, and you can have my fortnightly, yearly updates, which has basically told you last couple of months, don't worry about buying until November, and we bought 13th to 16th of November. We wanted to get in around this time, so we're planning. So corrective waves have either 3 waves, simple ABC, 5 waves. And those patterns that I showed you were the most important. And I'm rushing now because I know most people want to go see their family. And we talk about A, B, C, D, E patterns. They have 5-wave structures going up. 4th waves, 50% of traders will be bullish, 50% of traders will be bearish. There will have been a prior fast, powerful move down or up. It's often a triangle, and a 38.2% retracement is useful. These are gold, and they allow you to get about a 70% hit rate. One of our members calls me Mr. 75%, but others have done the stats on Mr. 70% or 69. The good thing about Elliott Wave is it tells us when we're wrong. Now, when we're wrong, we can correct very quickly when we admit that we're wrong. The best corrections to mistakes are when you say, I'm wrong, I stuffed it up, and move on, and you can think clearly from that. Let's talk about the XJO. The good thing about Elliott wave is you can leave the ego at the door. You don't need to forecast, and it's about the trading. You've got to watch the corrections and hang on for the impulse moves and in the impulse moves, because they're going to give you the best bang for your buck. The money that you risk, you're going to earn a lot more. I've been getting emails today from one of my platinum members, Gary, and I've got the text here, but I can't show you the text that here we go. He said, what's his email? He said, 100 pays plus today, 100 points plus. It's hard to let profits run. Now, he's a very successful trader and owns a commodities trading firm, and he trades off my advice. Now, he said, there's something he did the other day with an email about the SPY, but I don't have that up here. But all day long he sends me texts, where can I put my stop loss in the SPY? What do I do this? Where do I do that? I just reply back. So Elliott wave gives you structures and trades even when you're wrong. Let's look at the XJO and see what's up with that one. This is the XJO. Now, for most of us, and this is on the weekly chart, for most of us, we are thinking, where's the fifth wave? Where's the finish in this? The answer is this may be a B wave. This might be a completed 5 wave, and we get an A, B, C, which pushes up to 55, 40, that sort of area, and may complete. But notice here, it's still struggling. And this is data. I just got to check this data here. This hasn't got, it hasn't got today in it. Let's go to, sometimes my data updates funny at night for the current day. Let's go into the weeklies. We can see here, probably up to 55.45 would be the area that you'd most expect it to get to. 54.45, apologies. And we can see that this retracement has been fairly deep, which would mean this could be an A, B, C, which 55.84 on the top side. So up there, we'd start to worry. That might be Christmas. It might be, we'll talk about the forecasts later. There's some specific times where we want to talk about that. We can see that it's come back 5400, 54.45. That's the area where it's going to have some problems. It may get to 55.84 on the top side. So in terms of pattern, this is tricky. This still could be some sort of fourth wave right here, right now, and we may fail from 5400. So Dean says he can't see any waves on the screen, and that's what I'm saying. It's not as clear cut. But when we take some of these things away, we see 1, 2, 3, 4, 5. We see A, B, C, D. Sorry, we see 1, 2, 3, 4, 5, A, B, C, and then we see this could be wave 2. So can you see a little bit more clarity in there, Dean? Can anyone see a little bit more clarity? Raise your hands. Okay. I didn't draw anything, Dean. Would you like me to draw it? Okay. So here, we might consider this as a wave 1. This is a wave 2. This is a wave 3. And we are maybe in a wave 4 now. Question mark. As long as it doesn't go much above 54.45 or 5400. And we can see here, this could be wave little 1, little 2, little 3, little 4, little 5, an A, a B, sorry about the writing, and a C. And this could also be, and this could be wave, say, bigger A. Let's make it a bigger A. This could be a bigger B, and this target area a C, with an outside chance at here before it goes lower. Okay, is that helpful? Okay, now STW is one of our favorite trading vehicles. It basically gives you the same results, and it's fantastic as an ETF because it replicates what the XJO is doing and gives you dividends at the same time. Now what we can see here is pretty much the same sort of chart on a monthly chart for the STW as for the XJO. We see a bit more buying coming into this than we saw in the other markets. We drop down onto the weekly charts. We can see a 50% retracement. We can see that same pattern, 1, 2, 3, 4, 5, A, B, C. So possibly into here. Certainly above $52.70, we're going for higher. I can't indulge in all requests because it's now about 9:30, unfortunately. And we're running out of a bit of pace here. Now let's drop down into, this was working there. We looked at the dailies. We're going to have a quick look at Bendigo Bank because we're looking at the banks. We haven't looked at those ones yet. Bendigo Bank. We can see it rallying on declining volume, and it's head-butted something. If this is wave 1, 2, 3, 4, then 4 is where we're at now. We're seeing declining volume on this rally. Let's look at the chart pattern. So it needs some volume over the next 2 weeks or 10 days to get it looking good. Drop it down onto the weeklies. We see nice retrace on a longer time frame. So we think A, B, C. Okay, this is a retracement, 61.8 if we're looking into. We see a nice little pattern here, looking for $11.53 to $11.57, a break above $11.87, looking for $12.64. The other one which I wanted to look at was Bank of Queensland. I did some other things with, so we can be bullish until those levels are achieved in a lot of these things. Bank of Queensland is better than most of these. We're looking for $15.05. We can see that this area here, A, B, C, pull back down into $11.38 area. It got to a low of $11.39. That's not bad. That is a fourth wave. We're then looking for new highs or possibly a touch towards $18. Okay, let's move on from there. Can you do this all in your head? Elliott wave gives you price structures, obtains, and I can go through, as you've seen, I'll go through a chart very quickly. So we talked about Shanghai index. We can do some Elliott wave counts. I'll show you some of those. Now this software costs about $3,000, L-wave, maybe a little bit more with the currency involved at the moment. But if you want to do it yourself, costs about $3,000 for that. And you can buy that from my website if you like, or get a trial for $80 US for 1 month. Now let's see if we can just grab this. These are some of the things that the machine is thinking, not necessarily me. I'm going to flick this up. ANZ. This machine believes that we've finished wave 1 down on the green scale, and then it's looking for a rally back up for an ABC style correction back up into the first leg, back up probably to about $28.78. So failure is a bit of an option on ANZ. CBA, the machine is thinking this is wave one, which is a top in 2007. The low in 2009 was the finish of wave two, and then it's projecting 1, 2, 1, 2, and much higher. The problem with this is if it breaks much below about $50, it's over. So we at least know where we're wrong. NAB. The machine believes that NAB completed a wave 4 on the GFC. I can't disagree with that, of a larger scale. We've seen wave 1, and in the moment we're trying to finish wave 2, but it's not yet complete on the downside. So I've said to people, we should be looking to buy the banks in lower regions, in the low 20s for a number of the banks. I'm happy with that. And a wave 2 would be a nice move. Westpac, we can see Westpac. I don't quite understand the count that it's giving, but we can see a fourth wave triangle in this particular pattern. And what we see here is wave 2, 1, 2, 3, 4. I'd call that a wave 5 complete, but the machine is still hanging in there nicely with Westpac. Bendigo Bank, it says we've had wave 1 complete, but we're best off looking for buys somewhere down between $8.16 and $9.10. Bank of Queensland, it says, holy moly, this is a wave 2. We're looking for a lot higher. So it likes Bank of Queensland. And Bank of Queensland, despite the fact Queensland's been a basket case, has been doing well. AMP, it's looking, and as I said, you can buy this for about $3,000, depending on the exchange rate from the website at s.com.au/software. $7.88 for AMP. AMP has, it says that it's done a 3-4, so we're looking for that next push up. BHP, let's talk about BHP. This machine believes this is wave 4. Now, I've $20. I talked about $20 there. I then, from here, started talking about $19.81. I have been wrong by 5 cents on BHP. Some very bad news came out from BHP. For all of this decline, I've been saying, well, if I'm going to buy, I'm going to buy quickly and I want to get out because it's going lower. It's now the time to get your boots on and look at BHP again. Telstra. Telstra says, this is wave 1, this is wave 2. When we bought it at the $5.14 area, which was the perfect retracement target, it slipped through to $5.06, which makes this riskier. That's why our stop loss has been raised on this trade. And we're looking to take some profit. If you're an investor, we might just move the stop up to break even, because now the machine is making me think a little bit more about being more aggressive with it. But it says that's wave 2. Now, and did anybody see what I said on buy, hold, sell about Telstra about the start of this year in February? Does anybody remember what I said? And as it was rallying. You probably won't. I don't know how many people listen to me. Sell at $6.70, says Jonathan. Sell at $6.66, says Stephen. Yes, I actually mentioned $6.66. It blew through to $6.72, I think, at this time. So it was on this, I went on television, but down here I was saying it's going to $6.66. So we were planning ahead for Telstra to reach that level. We've seen it now roll over. So the wave count, I'm happy to give it a benefit of doubt. I don't mind buying down here, but I'm going to run a mile should it start to break down. Okay, I think that's probably enough for me, and my wife's probably going to be a bit unhappy with me for running so late, so I apologize to everybody. As I said, we have the Elliott Wave program. We have different things, different softwares. My system is Elliott Wave with timing and other things involved. It takes 30 years worth of charting. Lorna says, thank you very much. Great revision and insights. And for, I apologize for everyone. So where are you now in your trading? Have you ever gotten into a trade you shouldn't have? Have you ever been confused as to the direction of the market? Raise your hands. The next Train the Chartist seminars will be, there is a list of them in that it's coming up. We've planned them. We'll be in Perth, possibly Melbourne, a Sydney one. I think we'll be in Perth in April, Brisbane in, I think that's May, Singapore in July, and I'll be doing some very big webinars, big seminars in June, teaching forecasting. For those people who are interested in that, send me a long way. So if you've ever been stumped as to the direction of the market, raise your hand. Have you ever been not been able to work out where to put a stop loss on? Raise your hand. And if so, you can do some stuff with me. If you want help with the trading, we can do that. That's no problem. And we have some things in the banks which are of interest. And our whole approach to life is to make sure that you don't lose as much money as you would normally be losing. And I want to make sure that you start. I got some nice emails from people today saying, you know, this is the first time I've been making money and I've just joined you. And I like that. That's what I'm here to do. Okay, so here's the packages again. $10,000 odd. You can become a gold and silver member for a package price of 50% off, and 3 people only for tonight for gold membership. There's a 10% coupon off for the both gold and silver memberships, and just email me for those ones. And Wayne, if you came on 50 minutes ago, you might have got everything. There is a recording available for PHG members, bronze and above. I'm not sure how I can set that up, because what I do is I put that up on the site and they get that in their pages under the educational events. So at the moment, I might put it up as a group thing, but I've actually got to get going. And thanks everybody. Have a good night, and appreciate you coming along and spending your time with us. Have a good one. Thanks everyone. Cheers. Oh, night, Adrian. You're still there. Adrian, you're a very naughty boy. It's funny, we have some, we don't have the class captains in the PHG group, do we? We seem to have some people who are a little bit different. See you later. Good night, everybody. Bye-bye.